amid growing concerns about economic growth.
Consumer spending was
As
soft.
expected, cut interest rates another quarter point.
We are following breaking news. All three major American stock markets have closed down.
Bitcoin rose 10%.
Even gave the stock market a temporary second wind.
The market reaction, it was kind of nonplussed.
Tariffs going into effect tomorrow.
But the NASDAQ was also.
Investors will be watching closely for more clues about the direction.
It's time to tune out the noise and tune in to great information with A Steward's View. Expect valuable economic updates, investing techniques, and planning concepts that move you to be wise and decide well. You'll be equipped and encouraged in a stewardship mindset, managing God's resources 1 week at a time. You can listen to this podcast and previous episodes at astewardsview.com.
Welcome back. I'm Aaron Kolkman. That's Chaz Louder. Here's Paul Larson, and this is The Steward's View. So glad you joined us again. Check out this weekly economic and market roundup later today on our episode's blog post at astewardsview.com/blog. This week on ASV, we'll help you cut through the information chaos of the digital era so you can be wise and decide well. Yes, our wisdom bank is here for you right now. In past weeks, we've been going through a whole series called Beyond Returns that has focused on financial planning topics and those that are mission critical for you, the listener, to be making excellent decisions as you go forward. This week, we're going to hit pause on financial planning, and we're going to back up and go a little bit more into context and the economy that we're in right now, specifically the job market. There's a lot to say about what's happening with the job market amid government shutdown, its potential impact on the economy, and all the things that come into play when we talk about jobs. And we're talking about jobs in the U.S. Next week, we'll come back and we'll go more into financial planning topics again, Lord willing. So that's kind of where we are, where we've been, and where we're going. Before we get going, let me share with you, actually, I'd like to have Paul share, if you would, Paul. Let's go into a little bit of what you have from Colossians 3.
Well, a favorite verse that people talk about or use in Scripture when they're talking about work, there's some very good scriptures out there, but Colossians 3:23 is one that people like to go to. What I'd like to do is read 22 through 24 and see if we can't apply that to our thoughts about work in general. It says, bondservants or employees, obey in everything those who are your earthly masters, not by way of eye service as people pleasers, but with sincerity of heart, fearing the Lord. Whatever you do, work heartily as for the Lord and not for men, knowing from the Lord you will receive the inheritance as your reward. You are serving the Lord Christ. Mm-hmm. So what's happened just prior to this passage is Paul has been rolling out some exhortations about submission between husbands and wives and children, etc. And then he just says, just kind of in this list of people and positions, he adds this issue about bondservants, or really employees. And so what does it mean? What does it mean to work as for the Lord and not for men? And I think, just to pick apart the passage a little bit, the phrase work as for the Lord, not in men, and the verse goes like this: bondservants, obey in everything those who are your earthly masters. Remember, not as crowd pleasers or eye pleasers. It's not like you work hard when they're watching, okay? The Lord's watching you when you're not watching. So that's pretty important because it does reflect on who your God is. But what's interesting about this passage, I think, is that he gives us advice or commands about how we approach work. But never in here is there an issue that we don't work. And I thought this would be helpful, just to have that in our context before we talk about things like employment and job numbers and stuff like that. We were put on the earth, we were created to work. The thorns and thistles come, the droughts, the sweat of our brow, but it's never an issue of not working. It's an issue of having to work through the results of the curse. So there are some cultural and I think theological issues around work that we're missing maybe in our culture. We don't talk about much in church that we can get into. But I just wanted to kind of kick off this conversation about about work and employment stats and so on, with that in our mind, our work here is not to please men. We're working as unto the Lord. So if you got questions on that, Aaron, or that's just my initial thoughts.
Yeah, Paul, I'm so glad we're going in this direction because it brings us vertical right away. And when we talk about work, we talk about the job market and what's going on around us. It's really easy to get caught up in, what are the numbers? What are the positions? What kinds of jobs? What are the industries? Right? All the things that we buzz about. But back to the original question, whose is it? What is it? And what does it look like? Right? And so really, the question I ask a lot is, what am I called to? Right? And that's an important question. So let's continue on the path here as we talk about jobs in this particular episode. We'll get into the government shutdown, what's going on around us right now with that. We'll get into the economy a little bit more as it relates to jobs and any effect from the shutdown that we may see. And we'll look backward at previous shutdowns in that regard as well. But the full picture of jobs, not one data point. We'll get to multiple data points. And you've heard me talk, Paul and Chaz and others, about leading indicators, about coincident indicators, about lagging indicators of our economy. And so we'll look at those aspects as well. So when we come back, we're going to go into a number of details and discussion points about what's happening around us. Before we take a break, is there anything else, Paul, that you want to add, or Chaz?
Bondservant, the piece about that, very, very interesting. Like so much of the Bible in the New Testament, you've got a couple different meanings going on. You have, obviously, Paul is referring to husbands, wives, and children. And then he talks about servants. He's talking about those who actually are indentured servants of the house. Slavery. It's interesting. The New Testament doesn't talk a lot about slavery. It's just a fact of the ancient world. But what Paul said is right, is that, he's saying, hey, it's not just when your master's looking at you. Be working all the time. Be working, it's not him you're working for. It's the Lord you're working for. This is a passage I always tell people to encourage them, if the work that they're doing right now is not their favorite, it's to give them a bigger perspective. This work that they're into is preparing them for something. And as you think about investing and finances, a lot of times the investment choices we have to make are not super exciting at the time, but they lead to something bigger and better and greater and more thoughtful for our future. And I think about the character building in work, and also character building as we have to wait versus our culture that so much immediately wants, like, I did this, now give me. That immediate gratification. A lot of times there's a delayed gratification in that. And so the idea of that bondservant is, again, someone who is, the second meaning is wholeheartedly devoted to Christ or to the master. And so that's the piece that when you think about your money, it's not just a piece of you, you're giving all of you to the master. So,
well, and even to bounce off of that a little bit, where's the reward come from?
Right.
The Lord.
Right.
You may not get the salary you're looking for, the benefits. Right. You may not feel appreciated, but I think we as believers need to get really good at affirming even the most humble jobs, people that serve us, right? To affirm that they are moving the world forward, that they're adding value. And we want to affirm that in our kids. An entry level job can feel really lame.
Yep.
But it all adds up. And the Lord is promising to reward us. Okay?
Yep. There's
a promise here. And so it's in the fullness of time, and we don't know how long that is. But this is what can fuel our ability to work as unto the Lord.
So in the digital era and in the immediate culture, Chaz, I'll just coin it that way.
That's a good way to say it.
It's really easy in the culture of immediacy to look at your parents, to look at your neighbors, to look at your friends, whoever, and say, well, I want that, right? And whatever the job title is and the position description, right? And it's just like anything else. It's, I want that car. I want that office. I mean, I get approached all the time. Well, I'd like to come work with you. Okay. Well, what's your background? Well, I've been, haven't got any education or haven't finished college or whatever, that's fine. But what are the steps? And I lay out years of things. And I can't think of one person that I've laid out a full plan for that has stayed on in any kind of temporary way, right? In other words, only the people who were career minded about it, right? That they were actually called to it, stayed with it. I'm not sure I articulated that well, but the immediacy set of questions tends to go right where it's supposed to go, and that's somewhere else. Right.
I heard this one time. I can't remember what pastor it was. I'm stealing some other pastor's illustration here, which is what we all do. We all plagiarize each other, borrow from each other. But it was in the same vein, talking about watching someone else's highlight reel, but you didn't see the years of struggle that took them to get to that highlight reel. It's same thing. You think about, watching SportsCenter for those who are sportsy. You see this guy in the plays of the game, all these epic things, but how many, missed balls, missed catches, missed, fumbles, whatever you want to say, whatever sport you're watching, did it take to get to that elite status? Or in the case of investing, those bumps along the road, those ups and downs in the market and all the different techniques and things you do to get to the place where, again, someone young goes, they're just looking at Aaron Kalkman or whoever their person is now going, oh, I want that. Well, it's like it took a bit to get to that, so. I
think that's where the term 20-year overnight success comes from.
Yeah, that's right. So many times these overnight successes in the garage, you hear the garage and people move really quickly from the garage to, Fortune 500 company. It's like, well, there was a lot in between the garage in there. Yeah. I'll get you guys a thing queued up.
Yeah, let's take a break here. That's a good idea, Chaz. And when we come back, we'll go into the details and discussion of what's happening with the U.S. job market.
More of A Steward's View in just a moment. Investors have stocks, bonds, mutual funds, ETFs, options, futures, real estate, and more. There's one place to look at all of your portfolio. It's called Fusion, Portfolio Aggregation. No contract, no hassles. Fidere's portfolio technology gives its users a chance to see all of their assets all the time, wherever they are. The Fusion platform is open for use without a contract and without a hitch. It's based on mean variance optimization and analysis research by Aaron Kalkman. Fidere uses the Fusion platform to optimize assets for its clients. For more information, visit fidereadvice.com and click on Fusion at the top of the page. That's Fidere Advice, FIDERE advice.com. Now back to A Steward's View with your host, Aaron Kalkman.
All right, Aaron, are you ready?
I'm ready. Let's hear some noise.
3, 2, 1. Hey, we're back. It's producer Chaz with Aaron and Paul, and it's time for a little bit of noise. Guys, I got something really special today. Special because this guy has a cute name for his little segment. It's Ericnomics. It's not economics, it's Ericnomics.
Okay.
And I'm going to go ahead and pull this up on the screen for you. Let's see what you guys think. Now, again, I've heard this a lot lately as these reels come across the social feeds. I've heard kind of the sentiment that this guy's talking about a little bit, and I will be interested to see what you guys think about this.
Stocks are going to crash. There's no doubt about it. It's a matter of when, not if, and here's why. If you're new here, I'm Eric and I've worked on Wall Street for a decade, so make sure to send this to a friend who needs to see this. Every major US index has been hitting all-time highs, and we're seeing endless headlines about stocks being overvalued. Even the Fed Chair Jerome Powell recently said that stocks are overvalued. So let's take a look at what we're looking at when we say stocks are overvalued. The CAPE ratio, or the Shiller PE ratio, is looking at the prices against the inflation-adjusted earnings from the last 10 years. And it's sitting at a 25-year high. The only time higher was at the 2000 dot-com bubble. And then we have the Buffett indicator. This one's simple. This looks at the total value of the stock market against the GDP. And this shows that the stock market is double the size of the GDP, and it's sitting at an all-time high. Lastly, we have the forward PE ratio. The 30-year average is 17 times according to JP Morgan, and now it's currently sitting at 22 times. Some reports actually show it's closer to 30. And if so, that'll be even higher than the dot-com bubble. If you want to see what I'm doing to protect myself, sign up for my free newsletter where I share additional insights and actionable steps. Comment the word news and I'll send you a link to sign up. If you want to see my portfolio, everything I own, and get alerted whenever I buy or sell anything, check out the free Blossom Social app by commenting the word stock and I'll send you a link to get it. And make sure to send this to a friend so we all stay informed.
Okay, guys, there you go.
Okay, how much time do we have?
There's a lot of your language in there.
Yep, there is.
So what do you guys think about ergonomics?
Well, my initial comment is he's pointing at really important indicators. Okay, high PE ratios, high stock valuation over GDP. All those are really valid indicators.
When we say, okay, he's got good metrics and references, we have a very high concentration of stocks that are overvalued in this country. There are about 10 of them in the S&P 500, the Mag 7 plus about 3. Okay, we may be talking about the Mag 10 sometime soon, or the dozen or something. But those 10 stocks, and I won't name all them for the sake of time, but they are the ones that are causing comments like this. They're the ones that, interestingly, back in March, we had a whole episode on volatility. And I talked about the dot-com boom that happened in 2000. That's right when I was getting started in finance, Paul, as you probably don't realize. But my comment is this, that during that boom, we had stocks that were overvalued and the companies underlying those stocks or attached to those stocks were not profitable. Okay, now we have overvaluation in just a few stocks, not 500 of them in the S&P 500, just about 10. Okay, so let's be clear about which stocks are overvalued. And then let's say, all right, well, also, by the way, these are profitable firms. Okay, so to Paul's point about a crash, I'm all for a correction. That's a 10% or more decline in the overall index in U.S. stocks, typically the S&P 500. Okay, let's have one. Why not? It's buying opportunity. It's a healthy correction. Fundamentally, there's all these benefits, right? We can rebalance and make money, hopefully. But there's this fear factor that comes in to those reels that, let's be clear. I'll tell you why I'm not going to submit my name or my interest or whatever it was I should do at the end of that. It's because, when I say, well, I agree that we have a forward PE of 22, okay, on the S&P 500. I don't agree that it might be 30. Okay, so which is it? Don't say some sources. Which sources? I want to know the sources. Let's have them, right? I'm not going to subscribe to anything unless I know exactly where that's coming from. Okay, so when we do a blog post, in all seriousness, when we do a blog post, I'm giving reference after reference after reference after reference for all the economic investment and planning content that we post every week on stewardsview.com. So I would encourage this person who apparently spent 10 years on Wall Street doing something, right, in his own description, to, take a step back, zoom out, get the broader picture, maybe visit stewardsview.com and go from there.
There you go. Brother.
I would have just to bounce off of what Aaron said. When you talk about the big cap stocks that are so expensive, you realize Tesla's running 125 times earnings. No, 200 times earnings, over 200 times earnings. So does that maybe suck up
right.
and reflect because of the weight of Tesla?
Yep.
But I think his advice might be helpful to traders, but not to investors.
Interesting point.
I think the key thing is we are investors. We're looking to deploy capital where there is franchise value and the ability to create more value. Traders are people who are looking to predict the short-term moves and take advantage of that. And that we're just not speaking to traders.
Well, Chaz, I think we got about a whole segment out of this. How about you?
Let me ask one more thing. These things happen in waves, just little waves. Like this is the soup du jour of the internet. Right now I'm hearing...
Flavor of the month.
Yeah, exactly. I'm hearing... I played something for Paul off mic. And there was another really hyper angry guy. He was mad because he was a realtor. But he was also talking about collapse and crash and whatnot.
That's why he was mad.
Right? But so for those who are going, oh my goodness, there's this volatility or there's this whatever. When you guys hear the word crash, you guys say correction, not crash. You guys...
Yeah.
Okay.
Well, that's the question I have. Is he talking about a crash, which is something that takes a long time to recover from? Or is he talking about a correction? Because a correction can be very painful, but for an investor, it's an opportunity.
Okay, so now we're pretty much on the ASV Plus here. Let's wrap our break and let's get back into our content, shall we?
Go for it.
All right. And we're back. So let's go here. Let's talk right into the U.S. job market, and let's talk about what's happening with it in a broad way, like we do most everything else. The U.S. job market is slowing, but it's resilient. Non-farm payrolls, that is, additions or subtractions to jobs in the marketplace, available jobs, in net positive, net negative, that is a coincident indicator that has decreased recently, in recent years. The unemployment rate, another coincident indicator, stands at 4.3%. All right. It was about 4.1 or 4.2% at the beginning of the year, Paul. Thankfully, initial jobless claims, a leading indicator, the only, I'll call it the primary leading indicator in the jobs department, is at relative lows. Okay. So we're combining these points today, and we can see when we talk, as I just did, that the U.S. has increasingly remained at full employment all year long, even before that, post-COVID, really. And then, in economic terms, full employment, you can find a varying definition, but it ranges from 4 to 6% as to the unemployment rate. Okay. Now, we have a government shutdown going on around us. An Oxford economics study predicted that if 40% of laid-off federal workers become unemployed, the national unemployment rate could rise by 0.04%. My reference is from Reuters and the study that was done. If I have it wrong, it's Forbes, but there's two kind of complementary articles I posted as reference on what I just said. So I'll repeat it. An Oxford economics study predicted that if 40% of laid off federal workers become unemployed, the national unemployment rate could rise by 0.04%. Okay. Compared to the overall U.S. labor market, Paul, Jazz, listeners, the number of federal employees is relatively small. That minimizes the effect on the labor market when we talk about these layoffs happening amid a shutdown. Okay. So having said that, a potential 0.04% increase does grab the attention of economists and market watchers alike, right? It's not a small change, right? I mean, we have a very stable situation going on post-COVID, okay? But it's still relatively small compared to, an industry falling apart, for example. Okay, so the labor market is showing resilience. The U.S. economy continues to grow jobs, albeit at a slower pace than the last few years. So post-COVID, we've sort of seen job growth dissipate, right? Where we've seen, the U.S. get further along into full employment. I'll describe it that way, okay? So we see strength as the U.S. continues to contribute, and here it is. I say this a lot, and I'll say it again. We contribute approximately 1/4 of the world's economic output. While we house, meaning we have, as a population, 4% of the world's population. 4% of the world's population, 2/3, Paul, which you and I talk about a lot, is employed or looking for work. But just as a kind of a base number, 4% is what we have in this country, and we're producing 25% of the world's GDP. How? Well, we're doing it through technology and innovation for sure, right? We're the most productive country in the history of the world. All right. But is that stable becomes the question when we talk about recessions, when we talk about, the buzz on the commercial break and things like that. What do we see around us when we talk this way? Can this continue? I argue every time that Mr. Buffett was right, is right, and will be right for the foreseeable future as to the strength of the U.S. economy, right? He would say, hey, don't bet against the U.S. economy. So that's where I'm coming from with jobs. What do you do about it as an investor? Do you change your strategy? Probably not. But how can this information help you this week? Maybe help you sleep at night, maybe help you talk about something else besides the government shutdown. I don't know. What say you, Paul, and anybody listening?
I agree. Headlines rarely mean anything 5 days later. Okay, so be very, very careful about headlines. A 0.04% growth, and that's only if this huge amount of people get laid off permanently. But that goes from 4.3 to 4.34, right? That's not a very big growth in unemployment by any means. So I think you're right. Find something else to talk about. Be thankful, because when you look at the unemployment rates, the chronic unemployment rates in most countries in the world, they're always higher than the U.S. So we are a job-creating machine. And part of it's technology and innovation, like you say. Nothing fundamentally has changed in the American ethos of moving forward. And maybe we're getting a break on some of the regulation even some more focus. So we may see there's a shift back away from primarily a service economy and the information economy toward a production economy again. So it's a thing to note, but it's not something to obsess over.
You know, I've said for a long time, and this is the last thought I have for today, but I've said for a long time that if the U.S. is going to be capped economically, it's not going to be capped as to production and innovation, right? It's going to be capped as to consumption, right? Because we have this smaller number of households as a percentage of the world. We have a finite group of people who are consuming, you know, I don't have that metric in front of me, but a substantial amount of the world's goods and services, right? Chris Gerber talks about the American shopping mall very accurately, right? And, you know, just our own GDP, maybe I'll just point to that, is 2/3 driven by the consumer. Okay, so consumer spending is a big deal. Well, I bring that up just to point out that we may get slower growth in GDP. We may get, you know, kind of a flat period even, you know, but we're not likely to see production and innovation slow down. If anything, it's speeding up, and I think that's clear. But the one with that, and I'd be interested in your thoughts next time, Paul, or anybody listening. You can visit us, by the way, please do, at stewardsview.com, and go to any one of our podcast platforms. Amazon, Apple, Spotify. Will be on YouTube here soon, and you can comment right out there. You can also send us a contact email, I think it is, on our website. So please do let us know what you think. But my comment is this, that as we deal more with deglobalization that's happening, it's been happening before the Trump administration started. Okay, there was a more kind of prevalent isolationist approach to how we do things in the U.S. in particular. That does cause me some concern, because who are we going to sell our goods and services to if we have this great output machine in limited consumption, right? That's a question. I don't have the answer to that question, and I'd like to hear thoughts on that. Well,
we don't have time to go into it now. There is some possible thoughts on that, but the big cushion is that 70% of our economy is consumer driven.
Agreed.
Internal, it's consumer driven. China, it's less than 35%. They don't have a cushion. When people start reshoring and stop buying Chinese goods, they don't have a consumer base that can do it, that's inclined to do it. And so they don't have that kind of a cushion. Our consumer appetites have cushioned so many challenges that we've had over and over and over again for decades. So there are challenges, there are opportunities, but there's no room for despair.
Amen. And so this has been such a joy to get back together, to try an effort here with video. Hopefully it's successful, Chaz. You can muddle through the, any minor edits we might have and get us going on YouTube more full speed in weeks ahead. But I want to just say thank you both for your contributions. Thank you to our listeners for joining us again this week. I do really delight in the verse that we had every week recently, but the one today, Colossians 3:22 to 24. So I'll post that on our blog as well tonight, all about working, Paul, I don't want to take it out of your mouth, but working for the Lord instead of for man.
Yes.
Yeah,
Yes.
yeah.
Our work is for the Lord, and it's not to please men, but it is to serve men. Okay? That's really important.
How do we serve? I think
It's to move the world forward, to love our neighbor as ourselves by working to make things better.
I seem to remember an episode or two we did about service, maybe earlier this year. So you can check that out too at stewardsview.com. So thank you again. With that, it's been such a pleasure to be back. I hope this session has been a blessing to you and others you decide to share it with. We invite you to connect with us online at stewardsview.com. That's stewardsview.com. From all of us here at ASV, we look forward to connecting with you again next week. Until then, please do be wise and decide well.
You've been listening to A Steward's View. To learn more about Fidare Advisors or speak with Aaron, visit fidareadvice.com. That's FIDERE advice.com. To listen to this and other episodes of A Steward's View, visit astewardsview.com. A Steward's View is brought to you by Fidare Advisors, a registered investment advisor offering financial planning and asset aggregation. Asset aggregation systems are designed to align portfolios across accounts into a single, globally optimized investment plan for families it serves. Fidare maintains liquidity of client capital at major custodians and utilizes asset managers that have shown consistent historical performance through excellent risk management. This program is not an offer to transact any securities and does not constitute a financial planning engagement. Information provided has been prepared from sources believed to be reliable, but is not guaranteed and does not represent all available data necessary for making financial decisions, and is for informational purposes only. Fidare and its representatives do not offer tax or legal advice through Fidare. Please consult the appropriate advisor. Fidare Advisors LLC is a registered investment advisor. To discuss your situation or to learn more about Fidare, please visit fidareadvice.com. That's FIDERE advice.com.